There are people who will say that some industries, some sectors, some countries, they have a discount all the time. For example, gambling stocks, they always have a discount because of ESG. People don't want to invest in such companies, then they have a discount. So the PE ratio on average, let's say it's 20, then those companies will trade at 18, 15 times earnings. Whenever you hear such a thing, just show them this chart. This is Evolution, a gambling company based in Sweden. At some point, a few years ago, the PE ratio was 90. We cannot call this a discount. The market doesn't really care when it comes to individual companies. Maybe if you take an average, then there can be premiums, discounts, but the market doesn't really care when it comes to particular companies. The market is either over optimistic or over pessimistic. A few years ago, the market was over optimistic about evolution. Today, the market is over pessimistic. And we need to understand why. It's simple. Just like we talked about last week when we talked about Celsius, the market was valuing the company based on revenue growth. The higher the revenues were growing, the more the market was pricing the stock. But now, the revenues are not even falling, it's just revenue growth or decelerating, and the market is pessimistic about the future of the company. And of course, there are other issues. For example, you will hear about strike in Georgia where they have some of the main studios. But these are just reasons that the market will give why you should be optimistic or pessimistic about a particular company. Most of the time, these reasons do not matter when we look at the bigger picture. If you're not familiar with the business of Evolution, it is not really the typical gambling company. We know we have online casinos nowadays, and I have invested in FTJ, for example, which owns some online casinos, but it's not like that. But Evolution is not really involved in the operations of those casinos. They just make the games, they develop the games, and then, of course, they are going to sell it. But there's one particular type of games that they excel at. Live games, live casinos. Let's say you want to play blackjack, you know, the usual game where you have the dealer, you play with them in the casino, but you're someone lazy, you want to stay at home, you don't have the time to go to the casino, which is growing. We have a growing number of such people nowadays. You can play online and you have a live real person playing. Of course, the person is in a studio and the studio is operated by Evolution. They make the game, they run the studios, and of course, you are not going to deal directly with Evolution, you're dealing with the operator that you're using. The demand for such a business is growing. As we can see, over the past 5 years, it grew by at least 24% a year. And when we look at the overall market compared to land-based casinos and online casinos, it's only 25%. So there is the possibility for more growth. The market is going to expand, and with it, all these companies, including Evolution, is going to grow. Of course, a company like Evolution, which has a moat, will grow faster because you need to come and compete with a company. You need to build your own studios if you want to compete with Evolution. And they have all these deals with the different casino operators, online casino operators, and it is hard for other companies to come and build a studio and try to compete with them. They try to innovate, to build new games all the time. I'm not saying that competition is not here. It is here. Competition can come from AI too, but I don't believe it is going to be that important. Yes, some people would prefer to play with AI, but most people, I believe, would want the human interaction. If I replace myself with an AI, I'm sure maybe this video would have got fewer viewers. Evolution is also involved in the RNG business. In the RNG business, there is no live casino, it's just a random number generator. And they got heavily involved by making an acquisition a few years ago. It was a bad acquisition because if you look at the graph of the main business, the live casino business, compared to the RNG business, the RNG is underperforming in terms of revenue growth. And it is not bringing that much profits overall to the company. The live business itself is growing the most. And there is something you will notice if you look at the balance sheet of the company. There is a lot of goodwill. So they overpaid for it. It's not just goodwill, also intangible assets. I was a little confused at some point how they made this acquisition. I don't see any cash outflow. They paid with their shares, of course. But the share dilution was not that much. It's because the shares were so expensive that they were able to use the shares as currency. So if you think about it, yes, it was a bad acquisition, but it could have been worse. The shares were very expensive. They used the shares as a currency. Those people who bought the shares, The owners of the other company, the one they acquired, they are the real losers here. If you own Evolution, maybe in a way you won by selling your expensive shares to them, by diluting your shares to them. But today, the shares are no longer expensive and they cannot use it as a currency anymore. It will be bad for shareholders for them to use their shares as a currency. There are two things that are important to note with this acquisition they made a few years ago. First of all, the returns on invested capital went down. Of course, it was a bad investment, as we said. But over time, as they use their cash to maybe buy back shares, the business grows, maybe the returns on invested capital of the overall business is going to improve. It's just temporary what happened a few years ago. And another thing, if the stock price keeps going down, probably they will have to mark down the goodwill. And the market will not like this. It will seem that the profits of the company was lower or even a loss, but in reality, the cash flows of the company are still going to be positive. The cash flows are still growing. So this is something that we need to consider. If you invest in the company and the stock price is going down, there can be a markdown in goodwill. Speaking about the cash flows, as I said, the company has fantastic margins. They are one of the most efficient companies I have ever seen. If you think about it, the company requires little capital to grow. Most of the expenses, of course, with the staff. They have to manage all these studios, and that's all. It's just cost. It doesn't require capital to grow. They have leases, they lease all the studios, and it's small studios. They don't need gigantic building to run in 9 casinos. I believe that running a real casino would cost more money. And one good thing about the company, the fact that they don't need much capital to grow, is that they can return all the cash to shareholders. So they maintain at least a 50% dividend payout ratio. And they have been accumulating the cash, which is something I like a lot when the stock price was high, and now they are using the cash to buy back shares. The company doesn't have any debt at all, only leases. And today they have over 600 million euros in net cash. If you want to find the full analysis of Evolution and all the companies that I follow, you can find everything on the Superinvestors Club. There I talk about the intrinsic value of the company. I also have a course about investing for beginners, a course about how to read financial reports. We talk about goodwill today, about markdown of goodwill. I discuss all of this on the course. And of course, this is a club where you can come and chat and talk about investing. You can even have a free trial if you're interested. When I calculated the intrinsic value of Evolution, I believe that it was undervalued and there is a margin of safety. The way you calculate intrinsic value and the way I do it, it will be different. We use different numbers, we use different estimates, and it's okay. But I will just give you a simple example. This is not what I use, but just to show you how undervalued it is. 10-year rate is around 4.2%, so let's assume we can discount out 5%. And the earnings of the company over the trailing 12 months have been around 1.1 billion euros. So if we discount 1.1 billion euros at 5%, it's 1.1 times 20, which means 22 billion euros, the intrinsic value of the company. Of course, we can also add the net cash, 22.6 billion euros will be the intrinsic value of the company. That's without any growth at all, and the market cap today is around 18 billion euros. Without any growth, and we just discounted last year's earnings at 5%, and we got this. Now, of course, you have to take a margin of safety, you have to consider the growth, but just to tell you that this simple calculation shows that it may be undervalued. That doesn't mean that you need to go and rush and invest in the company. There are other things you have to consider. For me, for example, my largest investment is in FDJ. FDJ is one of the clients of Evolution. It is a gambling operator. Although FDJ's main business is a lottery monopoly in France, they are now entering online gaming. They will have Evolution as a partner. If you look at the stock price of the two companies, there is some sort of correlation. And I have to consider that 20% of my portfolio is in FDJ. So if I'm going to invest in Evolution, then I will have a big exposure to two companies with highly correlated stocks. I can take some profits on FDJ, invest in Evolution, let's call it some sort of diversification. This is something that I will consider over time. Yes, I will build a small position on Evolution, but at the same time, I will consider what's happening with FDJ, if it's better to put more money on Evolution than FDJ. I haven't really thought about it that much right now because my position of FDJ is so big and the company is so undervalued that I don't want to sell right now. Of course, it is not the most undervalued company in my portfolio. This one will be Crocs. I recommend you watch this video next. Have a nice day and goodbye.